Today, we're going to unpack 10 cash flow truths that will transform your business if you master them. Have you ever looked at your bank account to wonder how much cash you have in your bank? Have you ever wondered why you were cash poor after you bought a bunch of inventory and it's sitting on the shelf, unable to be used? Have you ever forgotten about taxes and when your CPA called you and said you owe X dollars and had a panic attack? If that is you, just know, yes, I'm judging you. Sort of kidding, not really, yes. But also know that you are not alone. Cash flow problems are one of the most common problems that you see inside of a business because no one trains you how to better manage your cash flow. Today, we're going to dig into how to better manage your cash flow and 10 truths that you need to know that will help you become the cash flow master that your business needs. The first, profits aren't cash. Have you ever wondered why? Your income statement may say you're doing great, but your bank balance is still cratering. You're still broke. That's because profit is theory. Profit is a reflection of the activity, but it's not a reflection of when that cash is hitting your bank. There are three things that will impact your cash that you don't often realize. First, it's changes in inventory, AR, and AP. As business grows, AR may go up, but you may not actually get that cash in the bank for a little bit. Inventory may be sitting on the shelves, and it may be where you can't even capture that cash at this moment. These eat cash and they don't show up on the income statement, which is probably what you look at the most. Second, money reinvested in the business. When you buy that new vehicle, when you buy that piece of equipment, when you buy that physical asset, that does not show up on the income statement. And then third thing that eats cash is your debt payment. So we want to make sure that we have systems in place to track all of these other types of spend. The best way to do that I've found is using the statement of cash flows. The key metrics that we want to look at on our statement of cash flows is we want to look at operating cash flows, which tells us, are you generating cash on the day-to-day operations of your business? If you're doing this over a multi-month, 3-month, 6-month, 12-month period, then we know that your business is healthy and generating enough cash to then support reinvestment, which is capital expenditures right below that operating cash flows. And that is free cash flows. So operating cash flows says, are we generating enough to manage our day-to-day operations? And free cash flows, positive free cash flows, tell us that we're generating enough to support reinvestment plus a little bit other. Once we get free cash flows, we now have capital allocation decisions to make, which we'll talk about at other points, but that's where we want to be. Positive in both operating and free cash flows consistently is what it takes to be a healthy business. Cash flow truth number 2 is your bank balance misleads you. Stop looking at your bank balance to understand how much cash you have available. Your bank balance does not represent checks cut or other obligations made. Those taxes also don't show up there. If you want clarity, start looking at your accounting trial balance. Have your accounting team prepare a weekly report that tells you your trial balance, your AR balance, and your AP balance. With these 3 numbers, you can transform the way that you look at your numbers. If you want to get more advanced, start preparing a 13-week cash flow. It'll show you the monster before it gets to the door. Third, cash reserves are your lifeline. Every business that goes under has cash problems because if you don't have cash problems, you can continue to problem solve and find a path through. Running out of cash is the most common reason that businesses fail, so we need to do everything we can to avoid running out of cash. Cash reserves give you time to proceed and try other options, which hopefully one of those options succeeds, which means that you survive. The reality is every business is going to have trouble times and downturns. Without that cash reserves, you won't be prepared to get through that bumpy point. Keep at least 2 to 3 months of payroll and basic expenses on hand so that when that off season or that dip comes, you can still maintain. If you want to learn more about this, let me know in the comments. I will probably in the future share a video about how to think about managing the excess cash that you hold. Fourth, invoice like your life depends on it, because the reality is it actually sort of does. Like, it sort of actually matters to make sure that you continue on as a business. If you invoice slow, you get paid slow or not at all. The reality is the slower you invoice, the more likely your customer has forgotten about you or is going to have to do some research when they get it, going to have to think a little bit longer about it, which means that they're going to be a lot slower in paying you. Create a system. We want to invoice quickly, and then we want to follow up on those invoices at a 30, 60, 90-day interval at minimum. By setting up these systems, you can keep that cash flowing in so that when things get bad, you know you can rely on those outstanding accounts receivables that you have. Next, pay bills when due, but not sooner. I've talked to a ton of different business owners who have all looked at their bills and said, I'll pay them right now as soon as they get them. We're not talking about holding them past the due date, or we're not talking about not paying them at all. We're talking about if they give you 30 days to pay them, take the 30 days. Set up a schedule where you do a weekly check run or weekly draft run and pay things that are due in the next 10 to 14 days. This will get you at minimum 2 extra weeks after receiving the bill to make the payment, which will ultimately improve your cash flow. Vendors don't give you credit for paying things early. They give you credit more so for predictability. And if you can predictably pay on a schedule, they're going to know they can rely on you, and that's going to be better for you than paying day of sometime and 45 days other times. Next, inventory is cash in disguise. Every product that's sitting on the shelf is cash that could potentially be converted. And if it's too old, you've thrown that cash away. It's just cash sitting on the shelf. So we need to be more intentional about managing that cash. Don't hoard it. Don't run it dry. Use demand planning and review your aging stock regularly so that you can discount things where needed to still get that cash out of that inventory instead of letting it just disappear. Next, growth eats cash. Yes, growth sounds sexy, but until you're bleeding funds because you're growing too quickly and you're running out of cash, you won't understand this completely. We had one client that was struggling with their growth, and it was because they took 230 days to transition from buying inventory to getting cash in the door. We transformed that and made it 45 days, and they now had so much cash, they didn't have that growth constraint anymore. I shared this in this cash conversion cycle video. We'll place it right up there so you can go watch it next. Taxes shouldn't be a surprise, yet every April, business owners are shocked when they become due. Tax isn't a once-a-year fire drill. It should be something that you plan for every single month. Pull cash out of your accounts, set it aside for taxes every single month. Your CPA and your stress levels, your heart will thank you. Use leverage, but use it sparingly. You seem to have people on each side of the spectrum, one who loves leverage, one who loves debt, the other who hates it. The reality is the truth is somewhere in the middle. We want to use debt for growth, not for survival, meaning use debt to help us grow more quickly, but not because we're drowning. If we're drowning, we need to make other decisions. Build banking relationships before you need them. When you need them, the banks don't want to talk to you, right? So get those loans, get the line of credit, get the debt before you need it. That will provide you flexibility, which is what we talk about next. Flexibility is king. We want cash, we want credit, we want backup vendors, we want cross-trained staff. Flexibility in a business is a lifeline to success. Flexibility buys you time, time buys you options, options give you control. You stay in the driver's seat when you have flexibility. If we internalize these 10 cash flow truths, you're going to move from cash flow beginner to cash flow expert really quickly, and you're going to give your business every possible chance to succeed. If you want to learn more about this, I've linked a free 7-day cash flow mastery email course below. Take this to answer the critical cash questions you need answered for your business. Comment below which of these slapped you across the face, which of these really hit home for you that you've experienced. Share your story, share what you felt. I guarantee you, you're not alone in this. Know that other people have felt this exact same thing. Thank you for watching. We really are trying to grow this channel so that we can help more and more business owners better manage their financials. Until next time, keep cash flowing it.